Okay, now to our backstory segment, and tonight we investigate whether the Reserve Bank's decision to cut official interest rates to a record low could drive a recovery in the nation's property market, on top of the Coalition's election victory. I spoke with the Courier-Mail's senior real estate reporter and Sky News presenter Elizabeth Tilley just a short time ago, and I began by asking her if the RBA's move will pump the accelerator to get house prices moving.
Well, it's going to be a welcome shot in the arm, whichever way you look at it. The housing market has been in a huge period of uncertainty. We've seen a downturn kick in, mostly led by Sydney and Melbourne, of course, but there's been probably the best part of this year. Buyers have been sitting on their hands because of uncertainty leading up to the federal election and just general pessimism in the market. So the best thing this will do is really put a shot of confidence back in. So buyers will start to feel more confident about getting back into the market. The latter half of this year, we'll see sellers feel more confident about listing. That's the main benefit we're going to see. For people who currently are borrowing, they're going to see around a $700 a year saving on a $400,000 home loan, so that's always good to see, although two of the big four banks, of course, under fire for not passing on all of that cut.
I noticed that.
Yeah, so Westpac only 0.2% and ANZ 0.18. So, yeah, so of course they came under fire from the Treasurer for that.
And Frydenberg wasn't happy.
Not happy at all.
Nor Philip Lowe.
No, at that speech last night, he actually sort of unprecedented made mention of the banks for doing that and said that customers should shop around even and really show their disappointment with that.
Liz, I was going to ask you about shopping around. So, I mean, I actually, this afternoon, I was going to ring my bank and say, look, you better sharpen your pencil. Is that a good idea for most people, do you think?
Yeah, I think it is. I mean, a lot of people can't be bothered or don't know if it's worth sort of the saving that it'll come out.
It's worth it though, isn't it?
I think it is. It definitely is worth a shot. In fact, we did it recently and we didn't get a great response back, but I think it's worth pushing, definitely, because they are really under a lot of pressure. They're on the nose after the Banking Royal Commission, so they've got to try and pull up their socks a bit. I mean, ANZ came out and were pretty open about why they didn't pass it all on, and it's because they were considering deposit holders as well. And, of course, they are the losers from a rate cut. There's a lot of retirees out there who are living off their savings from term deposits, so they won't be happy about this. But generally, for the housing market, it is good news for buyers wanting to get in.
And we saw after Scott Morrison was returned as Prime Minister, there was a pretty significant spike in the share market. Do you think that has also extrapolated into the property market? And you mentioned that there was confidence. Does there seem, you talk to a lot of real estate agents, you talk to a lot of property experts. Do you think there's been a fillip in the last since May 18?
Yes, there has. So agents are saying that they've seen an increase in inspections since the federal election outcome because, as I said, that uncertainty. Markets hate uncertainty. The property market isn't exempt from that. And so we've seen some agents reporting double the amount of inspections in the week after that federal election outcome. So that's a huge impact. They're saying that people were just sitting on their hands waiting to see what happens. Now they've got a bit of a confidence boost and the interest rate cut will only add to that. And of course we've got the Governor flagging more interest rate cuts in that speech he gave last night. He said it's likely because he's wanting to get inflation back on target. We are seeing spending slowing too much and unemployment rising. It's around 5%. He wants to get it back down to 4%. So we're definitely going to see more rate cuts. I think the market's pricing in about an 87% chance of one in August. Again, so that is going to keep momentum in the housing market for sure. And look, the big thing also is that we're likely to see the price falls hit a bottom earlier than expected. So we've got the likes of Shane Oliver, the AMP economist, coming out and sort of revising his forecast. He was saying that we could see falls of up to 15%, but he's revised that back to about 12%, saying we've already seen a 10% fall. So we're going to sort of see those falls hit the bottom. They're already slowing. We saw CoreLogic come out with the May hedonic index showing that the combined capital price falls were down 0.4%, which is the smallest month-on-month fall in a year. So we're seeing falls still happening, and this isn't going to trigger a huge bounce back, but the confidence is the main factor.
But when you think about the Sydney and Melbourne markets, and we'll talk about Brisbane shortly and Adelaide because I know there are some bargains there, but when you talk about Sydney and Melbourne, they've had unprecedented growth over the past 5 to 10 years. So there is a correction going on. But I mean, you know, when you think of Sydney and Melbourne and you think of a bottoming out of the market there, There's still been some significant property gains in those capital cities in the last 5 years, hasn't there?
Yes, significant. And so even though we are seeing that correction, they're still going back to pretty high levels. But really, Sydney and Melbourne are a different market altogether to the rest of the country. So everyone sort of looks at what's happening in Sydney and Melbourne and sees the falls that we've seen there and goes, oh my goodness, you know, and starts to panic here in Brisbane. But really, it's a completely different market. We're only now starting to see a bit of a fall this last month. 0.5% fall, which was in line with Sydney, but that's only because of that flow-on effect. And a lot of economists are saying we'll see things pick up again next year.
Where are the bargains, do you think? I mean, I know Brisbane, there's still some terrific bargains around
absolutely.
Brisbane. Adelaide, I mean, Hobart seems to be a place that's on the go.
Yeah, Hobart obviously has had a really good run the last couple of years, but they're actually saying that won't last, they're going to lose a bit of steam. So Adelaide and Brisbane is where it's at, I think, because you've got that slow, steady growth. It's always been that way. They don't run up too high, so they haven't got as far to fall. So, you know, a lot of the market are saying it's still a great place to invest. If you can get in, obviously anywhere in the inner city realm, if you can get in there, great, because you can't go wrong. But there's also some wonderful bargains just sort of in that middle ring. You can still get something for a 3-bedroom house for under 500,000 that needs a bit of work, and that's not something you'll ever see in Sydney or Melbourne at the moment. So,
Liz Tilley, thank you so much for joining us on the front page tonight.
Pleasure.